Continue to monitor, of course, keep you abreast of any news from the RFK hearing. We've also got to talk about the upcoming Fed decision and earnings results from 3 of the Magnificent Seven names, all coming this afternoon. Tesla, Meta, Microsoft. Steve Kovac and Julia Boorstin here with more on what investors should be watching out for. Steve, we'll start with you.
Yes, Sarah, the dynamics of this Microsoft earnings report has just really changed in the last week or so. We found out last week with that Stargate announcement that Microsoft is no longer that exclusive cloud partner for OpenAI, and that Stargate project is really where a lot of the resources are going to go. At the same time, DeepSeek is kind of raising all these new questions about these AI capital expenditures that have been under scrutiny from investors since probably last summer, since they talked about not just Microsoft, but Google and so many others talked about the enormous amounts of money that they're planning to spend. And then today we got another wrinkle in the story with OpenAI saying that they probably suspect that some of this DeepSeek stuff was actually trained on OpenAI using the OpenAI APIs in an improper way against the policy there. So that is still being played out as well. But the numbers still remain here. The fiscal year 2025 CapEx for Microsoft, $80 billion. They are sticking with that. That's the number that they plan to spend through the end of their fiscal year in July. And then the numbers to watch for are the Azure growth. The previous quarter, Azure had grown 33%, and 12% of that came from artificial intelligence. OpenAI is a big part of that. Of course, we're going to be looking for what that number is today, and also moving forward if the growth rate will continue to accelerate, especially for AI processes. And then OpenAI, those losses that OpenAI is suffering continues to suffer, to hurt Microsoft too. They are expecting a $1.5 billion hit to income this quarter, Sarah.
Steve, appreciate that. We're going to be talking a lot today. Meantime, Meta is also set to report this afternoon with AI and DeepSeek sure to loom large. Our Julia Boorstin is here to talk about what might be important. Certainly CapEx guidance, or at least a reiteration of it, will be interesting, Julia.
That's right, Carl. AI, its costs, its payoffs, and the future of open source will be the key factors driving Meta's results and also its stock after earnings today. Now, Meta shares are up 67% in the past year and up about 8% in the past week. It's a rare mega cap tech stock that has benefited from the surprise explosion of DeepSeek. Its success is seen as validating Meta's open source approach to AI. And because Meta is seen as a key beneficiary of AI, both in terms of its ad business and also its consumer chatbot. Now, CEO Mark Zuckerberg just last week pre-announcing the company's 2025 CapEx outlook, saying it'll be $60 to $65 billion in CapEx spending as it builds its AI infrastructure. So now analysts are hopeful that DeepSeek's lower costs will eventually spell savings for Meta. JMP with a buy on the stock, saying with AI becoming more efficient, it is increasingly likely that 2025 is Meta's peak AI CapEx year as it digests its AI investments from the last few years. So the question is how Meta's AI investments are paying off this quarter. While earnings per share are projected to grow 27% from the year earlier quarter, revenue growth is expected to slow to 17% this quarter, down from 19% last quarter, and is projected to continue to slow to 14% next quarter. So we'll see whether those AI tools, plus monetization of Messenger and WhatsApp, and ads coming to Threads can rev up growth. Guys?